I'm Richard McNeely, Managing Partner of Danes Accountants. I've been advising businesses for almost 30 years. The first 16 years of my career was in banking, and most of the advisory work I do centres around businesses seeking to improve performance and looking at cash generation. During the last recession, I witnessed several businesses suffer as a result of their lack of cash flow forecasting, and in one case, a really strong business with a bright future nearly failed. Fortunately, however, we were able to intervene and support the business, and they face today's crisis in really strong financial health, with cash in the bank and all of the tools at their disposal should they need to raise finance. So I wanted to share this case study as a means of demonstrating just how easy it is to underestimate the level of cash headroom needed in a business. The forecasts and the underlying model are real, and the assumptions would have a proportionate impact on a smaller or larger business. So I believe that this presentation is equally relevant whether you're a £1 million turnover business or a 100 million turnover business. So here we have the profit and loss projection put together by the customer, and they're showing year-on-year growth in turnover and profitability. So here we can see turnover of £21.3 million increasing to £23.4 million next year, which will be a record year, and profit after tax this year projected at £650,000 approximately, increasing to £827,000 next year. So then if we turn to cash flow, as you would expect, the profitable business is generating cash, and this is demonstrated in the graph. The business enjoys reasonable credit terms and has got several blue chip clients who pay on average within 45 days. So as you can see, this business is in very good health, albeit it starts the year with little or no cash, and that's because last year it invested in capital equipment in order to fulfill future orders. So a really positive picture there, and at least that was the case before coronavirus. So, as a result of coronavirus, there's been a need to reforecast, and the business, which enjoys good visibility on orders, is now predicting a reduction in turnover of about £3 million, with sales reducing down to £18.4 million and profit after tax down to £138,000. And it should be noted that the business is planning to utilise the coronavirus job retention scheme, which does offset much of the downturn, but nevertheless the reduction in profit is about £500,000 from the original forecast. And broadly speaking, the business makes a rough estimate that they would need about £500,000 of extra working capital to see them through the crisis. So, a £500,000 reduction in profitability has got a marked impact on cash, and the steady upward curve is replaced by this new profile. The business now forecasts a borrowing requirement of £750,000. However, the dip in cash is short term, and the business quickly returns to credit. So arguably, a bank is likely to support this type of requirement by providing a short-term overdraft facility. So to be prudent, we sensitise the projections to try and get a clearer picture of what might happen if customers, who, let's face it, are also affected by the current climate, settled invoices 1 month later. The low point is now £1 million, and the business spends much of the year in overdraft before recovering next year. But we must remember that next year was predicted to be the best year ever. It is likely that funders will be more sceptical about future years' performance, and it wouldn't be uncommon for this type of requirement to be funded by loan, spread over a longer period to ease cash flow. Supply payments are really important in this business, and given the uncertainty, suppliers have tightened up. They've had some bad debt experience with other businesses in the sector, and as a result, the business is paying suppliers 5 days quicker on average. And incredibly, this moves the requirement to £1.2 million before we build in any headroom. And this change is necessary to ensure that the business still benefits from early payment discounts offered by suppliers, which contribute hugely to overall profitability. So I've just touched on headroom there, and what do we really mean by that? That's the extra wriggle room over and above the forecast peak. So we're forecasting an overdraft requirement of £1.2 million here, and arguably we'll be looking for facilities that might be £300,000, £400,000, £500,000 greater than that to give us that wriggle room. So, in summary, our advice. Forecast cash flow, not just profit. So many business owners concentrate their effort on forecasting profit, and that's really understandable, but it's really also absolutely vital to forecast cash flow. Consider as many of the what ifs as possible, and please, when raising finance, raise finance based on what you think the business really needs rather than what you think the bank will lend. Cash is king. With cash, you can reorganize, change the structure of your business and adapt to market conditions, and even take advantage of the surge which normally follows an economic downturn. Without it, however, your business could be at serious risk. So when raising finance, we ask all clients to allow a sensible level of headroom beyond the peak requirement, and do the exercise once, but do it well. It might take a few days extra to put together some good quality forecasts, but the impact of not forecasting adequately can be unthinkable. So, stay focused, project cash flow, save the future of your business. Thank you for listening.